Hey guys, it's Jim from JAGfx.com. As I alluded to in an earlier video and also in my Facebook posts, I'm going to share a fairly basic trading system that I traded many years ago with a group of other traders. Now this video will just be a brief overview of it, so it won't have all the details as such, but I'll just explain the history, the background of how it all come about and how we used to trade it, etc. So basically the chart you're looking at is a 1 hour chart. This is the Great British Pound US dollar. So back in the day we used to trade this three currency pairs. It was the Great British Pound, the Euro USD, and also the USD Swiss franc. So it's just three fairly correlated pairs. Our plan was we started on a Monday morning, Australian time, and our target was a combination of 200 pips for the week. So that was made up from all three pairs. So the plan was, as soon as we got 200 pips for the week, we called it quits and stopped trading. Now sometimes we're finished by Monday lunchtime, and in those cases we're always tempted to keep on trading, and we normally end up losing everything we made, and we're still struggling come Friday night trying to make up the 200 pips, but we eventually got it. It was fairly successful. I'd say probably 9 out of every 10 weeks we got our 200 pips, so it wasn't a bad system at all. And when I say we, it was a bit of a complicated system. There was 3 traders. There's me, a guy from Taiwan, and a guy from Canada, and we're trading for a British guy based out of Spain using Spanish brokers with a Swiss trading account. I told you it's complicated. This is going back a few years. Yeah, it was a good system, and I'm going to show you the basics, and then I'm going to show you how I've modified it slightly. Now I'll just explain a few things. Basically it's called the SAR method, and SAR means stop and reverse. It won't always be a stop and reverse, it may just be a stop, but generally it's a stop and reverse, which means you are in the market at all times. Now, as I said, this is just a 1 hour chart here, a naked chart, no indicators. All I've got is these horizontal lines down here. Now there's 4 yellow lines, they're called my working lines. I've got a red line, that is my stop and reverse, or my SAR line, and I've got a blue line, that is my entry line. Now that entry line could be either a buy or a sell, doesn't really matter. So the thing is with this, one of the biggest questions I always used to get was how to know where to start. And the easiest way to explain that is if you're starting from, say, now, today, which is Tuesday the 24th of January, I'll probably go back on the charts, back on the historical charts, back to say Thursday or Friday, and just look for a main trend, then start setting up the lines from that trend so it gets you up to the current time, the present time. That's the easiest way to explain it. So let's just have a look. I'll just draw a horizontal line, say here, right? So this is roughly my start point. Now the best way to show you is by examples. When I say this is my start point, this is where I'm going to start doing the lines from, all right? So we can assume, I'll give an example, all right? So say previous to this line, so on the left of this line, I've been in a sell trade from that little trend down, say a small trend down. My red line is there, which is my stop and reverse. We'll just use this as an example, all right? So eventually price comes down to this low here, and on that low there I would have my, because that's the most extreme low from the left hand side of that line, I would have a yellow line on that low. Now this is how it works. So I've come to the charts, and this is what I've got. I've set this up from back here somewhere. I could have done it from this trend or anywhere in here. As long as I get something going, it soon sorts itself out. So, right, now we're sitting around for a few hours waiting, and as soon as price breaks this red line, the SAR line, that is now the entry point. We're now, because that was a sell, now we're in a buy. So I'll show you what happens here. So all you do is you take the bottom yellow line and move it up to the high of the candle that broke the red line. Bring the red line down to where that yellow line just came from. Now we'll take the blue line and put it at our point of entry, which is across that high here. So now we've got a trade on, and all the lines do is give you a visual idea of where we're at. So there's the entry on the blue level. There's your stop and reverse on the red level. So if price just rolled over and come straight down here, it would take me out of the buy trade into a sell trade through there. So that's your risk between the red line and the blue line. So ideally we want to get that red line above the blue line as soon as possible. Now, as I said, these are the working lines. So we need all four in play before we can really take any action. So we've got this high here. It's a little bit hard to see. I might just blow it out a bit so you can see it. Where are we? Here we are. So we had that high here. So there's your entry on that, across the top of that candle. There's your high. Now there's a new high just there. So you can see it on the blow up. So I'll just reduce it again because I don't like the charts looking like that. So all I do is bring up one of the other yellow lines, bring it what I call into play. So at the moment when they're out of play. So we've got two yellow lines in play. Then price falls away and goes back up again, and we've got a new high on this candle. So we bring up the third yellow line. Now we've got a new high here. So there's another one, another yellow line. So now we've got the red line, the blue line, and all four yellow lines in play. Now if that was a Monday and we're looking for 200 pips, there's nearly 50 pips there already. And it goes up there, there's 70 odd pips of all three pairs today, you'd be finished for the week. But that's just, let's forget about that for now. So, all right, we've got the four yellow lines in play. Now we've got a new high. Now we haven't got any more yellow lines, so all we do is take the bottom yellow line, and it's just like leapfrogs. That wasn't actually the bottom one, that was the second bottom one, but it should be the bottom one, so I'll just move that one down a little bit. So all it does is leapfrog it. So see, price goes up and comes down again. It's still within the yellow lines. Now all four yellow lines are in play. Then it goes up again. There's a new high there. Take the bottom line, put it up there. New high. Take the bottom line, yellow line, there. New high, there. New high, there. New high, there. New high there. Now, this is where it gets interesting. I haven't checked this chart previously, so I've got no idea how it's going to pan out. But now you can see we're up plenty of pips, over 100 pips. This is only the 1 hour chart. Price has come down and gone up into what used to happen was price would create this sort of like you can assume, like pretend this is like a box. That's the bottom part of the box, the bottom line, and that's the top part of the box, the top line, all right? Forget about the two middle lines. So your upper and your lower lines, yellow lines, they sort of form a box. Now if price comes out of that box convincingly, like it has here, then goes up into the box, like it has, it went up there just for the week there, it wasn't convincing, but it's gone up convincing there. So what happens is, what used to happen was the SAR level would get moved up to that low there, all right? So then we've got two new highs, and there's your high. So now, forgetting about what happens to the right here, we've locked in profit from there to there. We can't lose on this trade, all right? So we'll just see what happens now. Now we see we've got a break of the SAR line to the low side here. Again, price has come out of the box, hasn't really gone back up into it, then breaks the SAR line. So like before, all we do is take the top yellow line to reverse, because we're going into a sell now. Put that on the bottom of the candle that broke the red line. Move the red line to the extreme high. Take this blue line, which is now your new point of entry for your sell on this bottom here. And now these yellow lines, you can just move them out of the way if you want, if it just makes it easy for you. So now we can see our risk is between the blue line and the red line, which is about 75 pips. and we're in a downtrend. So straight away price goes against us, but it doesn't threaten our SAR level, and we get a new low there, so we just move that down to there, and so on. So we just keep on moving that down, like that, like that. Now I'll just move the chart across so you can see it. Now you can see that we've got the 4 yellow lines are now in play. So we've got that box. Now that's the top of the box, that's the bottom of the box. Price convincingly goes out of the box, then back into the box. SAR level gets moved down to that high. This is just fairly basic stuff. So here we go. You could even technically say it's gone back into the box and out of the box, then back in, but we'll get into that later. So we've got a new low again, new candle, another new low, which is probably on there too. Another new low, and another new low. So there again, price has gone out of the box and back into the box, moved the SAR down to that high there. Now we're locking in that small amount of profit there. Like in the meantime, we could have taken profit 3 times here already. You know, I'm just showing you a complete SAR to SAR method. So we'll keep on going because there's a nice spike down. All right, so there's your SAR level. Price comes down into this level here, then back out and through. So we're reversing. So we take the bottom yellow line, move it up to the top of the candle that broke the red line. Bring the red candle down there. Point of entry goes across there. So get rid of these other yellow lines so they're out of the way. Again, there's your risk between your red and your blue line. And as you can see, price doesn't really go up much higher. It goes back up, then back up and back up, and it just drops down, all right? So here it would have been a decent loss, but you'll see shortly that I've modified this to prevent losses like this. So you've got a 70 odd pip loss there. And what happened was price just dropped down. Take your top yellow line down there, red line up to the high, blue line on the entry point. These other 3 lines are out of play. We're in a sell now. There's a new low there. And we had things in place to, when you had big moves like that, and so on. All right, so that's just the basics of it. So it's four yellow lines, a red line and a blue line. Stop and reverse method. That's how we used to trade it. We would get, as I said, 3 pairs, 200 pips of the week, call it quits. Now, with this same method, because it's on the hourly chart, we basically had to check. Even though we worked as a team, we were working different methods, so one person had to look after this method. It was ridiculous, the amount of hours or lack of sleep. Because literally you have to check the chart every hour, the top of every hour. Sometimes you can get away with having a 2-hour gap, but generally it was every hour, so it was really hard work. So the team, we split up, went our separate ways. I did trade this on the 4-hour charts. I modified it slightly and traded many pairs on the 4-hour chart, so I could do it by myself and get plenty of sleep. And I remember trading a couple of months there, I had 2.5 to 3,000 pips per month. It was really good. Then I had 2 months where I was barely breaking even, and all I was doing with the 4-hour charts was had a 200 pips target on every trade, and it was doing pretty well. But the 2 months where I wasn't making any money, it just was hard work. A lot of work for not much in return. Right, so what I thought, I'm going to revisit this method and go back to the 1-hour charts. Now, when I say 1 hour, you could trade this on the 5-minute chart, 1-minute chart. You just have to be a lot quicker in your decision making, pick your times, etc. But 1 hour is probably the ideal time. Now, I find it hard doing it by myself, so I'm just sharing it with you guys. And I may consider, if someone's really interested in it and wants to learn it properly, then we could sort of form a bit of a trading team, myself, maybe 1, maybe 2 others, and we could take it from there with like a profit share type basis. But the thing is, it requires time and commitment. So if you've got a job and you can't commit, don't waste your time. It's just not worth it. It does take time, and I can't be awake 24/7, or 24/5. But anyway, let's just have a quick flick to another chart. This is one I prepared earlier. Now, it's the same time frame, except this is just the pound New Zealand, just a bit of a change. And as you can see, you've got the 4 yellow lines, red line and the blue line on the chart. And you can see I've also got my favourite QMP filter, the blue red dots on price, and I've got the good old MACD Platinum down the bottom here. Now I figure they can help with this method. Now I'll just show you quickly what I mean here. Alright, let's say I've got this grey vertical line here, and this blue, forget about what's happened previously. I've just assume I've gone through and I've had trades now. This is my setup, and I've taken a sell trade on the break of the blue line. Here's my red SAR line as usual. I've got a red dot there, which is good. MACD's not looking that flash. So anyway, let's just continue. So we do the same things we did before. Yellow lines work, bring them into play. So here we are, we've got 4, and again I haven't been through this chart, even though I set it up, I just picked a place at random. So we've got 4 yellow lines. Now what I'm saying this time, if you use the crosshairs, see the MACD Platinum down the bottom there, it's giving me a blue dot. It's below the 0 level. That tells me there is a chance that this is going to head up sometime soon. So you look where my stop is, look where my point of entry is. That's a fair risk there, and I haven't got much in return to the downside. So I know it's easy in hindsight, look at a chart, but just bear with me here. So as soon as I get a blue dot, I could either watch it for 1 or 2 candles, or I could just go to the most recent fractal, which is in this area here. So see, I had that bullish candle and had that bearish candle. So that, to me, what I'd be doing there is bringing that SAR down to there. All right, so just bear with me and just watch what I'm doing here. So there's another low here. So now all 4 lines are in play, and before I know it, bang, we're up through the SAR level. So we'll just continue on. So now we're in a buy. So the lines just swap as before. Point of entry is brought down to there. We've got another new high there, which is in line with the blue dot and the MACD Platinum. So it's in line with the QMP. Got another high there, another high there. Now, here's our risk between the entry, the blue line, and the red line's our SAR. We're up here somewhere. Again, we've got 2 options here. We've got the red, point to the chart there, you can't see me pointing. We've got the red dot on the MACD Platinum above 0 level. That tells me there's a possible sell coming. Then price is dropped out of, there's no obvious fractals there that aren't, you know, it's just too close, too messy in there to place something. So there's another candle. Then we have a bullish candle there, and that follows the old rules where the price came out of the box convincingly, then back into it. So that'd be a SAR move to there. As you see, it goes up and rolls over again. Here's your red dot, and we get a break to the downside. So we just put it, I know it's getting a bit tight here, and I apologise for that. I'm just trying to give you an idea of the workings without getting into too technical. There's probably 2 yellow lines there, doesn't really matter. So these yellow lines are out of play, so just ignore them for now. So we've got 1 yellow line in play, possibly 2. Red dot, so we don't want to move the SAR yet because technically the QMP is red, MACD Platinum's red above the 0 level, so we want to give it a bit of room to move. So price keeps on going down nicely. Yeah, there's a nice big drop there, which is good. Now let's have a look at the, so we've got a blue dot on MACD Platinum there, then we had that huge big drop, which was good. So to me, that would be down on that little fractal there, which is inside the blue line, which is perfect. So we want to grab that yellow line from there if we can, which we can't. There it is. So I'll take that yellow line down. Take that yellow line down. So now we're just looking at, just get that right, so it looks right. So now we're just looking for, we can see that the MACD is well below the zero level. So we're thinking there's going to be an opportunity for it to reverse, and we'd like to lock in some of that profit. So what we've got here, and this is things I've got to consider. So you've got a new blue dot down the bottom here, and I know we can see what happens to the right, just ignore that. So we've got a blue dot there. There's no real area for a fractal in there. Possibly this bullish candle, then it had that bearish candle. So well, these are the things I've got to nut out with the rules, which would make sense anyway, because even if I got that blue dot on the QMP, I could even bring it down to the top of that candle, but just let's leave it at that. So we're going up again. We've had a complete change of trade here, so we're going to the upside. Just quickly go through it. We've got getting the yellow candles in play. Yellow candles in play. And in the meantime, we're watching the MACD Platinum. And let's see where we're at. So there's our risk between the red and the blue line. We've got a 1-to-1 risk reward so far there, but it's dropping away. And then again, we've got the red dots at the same time, and there's really not much of an opportunity to move anything. But it's done the old through the box, bottom of the box and back into the box. So all we can do is reduce risk there like that. And again, we've got more upside, higher high. Keep an eye, a watch on the MACD Platinum. So there's potential out of the box and back into the box. Not quite convincing, but there's a red dot on the MACD Platinum. It's given another fractal. So we move it up there. Now we're locking a little bit of profit, not much, and so on. So I didn't even discuss divergence. If I get divergence on this setup, I'll know to give it more room to move, and I'll be more confident in the signal. I can move my SAR. I'm thinking a few different things, a combination of using the QMP, MACD Platinum, and also just a method from the old system. There is other rules built in for huge moves, so you get a big move like this, you don't want to give that up. So there is other rules we've got in place. There is the use of trend lines, etc. You'll never miss out on a big trend on this system if you're in the trade. And yeah, so that's about it in a nutshell, guys. It's called the SAR method, stop and reverse. So if anyone is interested, I'll post it on the Facebook group and we'll see what sort of response I get there. If not, I might put it out to my email list. But it might be a bit of collaboration and see if we can come up with a system that's got some hard and fast rules and see if we can do something with it, and we'll take it from there. So thanks for listening, guys. I know it's probably a bit intimidating to start with, a bit confusing, but it's fairly straightforward once you get the hang of it. Okay, cheers.